Ever feel like your account balance is holding you back from real gains in the stock market? Using the simple trick, I turned $5,004 into $20,300, which is a huge 305% return. And I also turned $3,350 to $11,750 for a 251% return. I know I said small accounts, so that trade could have been done with as little as $335. I just bought more contracts. By the end of this video, you'll know exactly how small traders are leveraging Leaps options to make big returns this year and will continue next year, and how you can avoid the biggest mistakes that cause traders to lose money. I'll also go into detail of the 305% profit Tesla trade, so stay tuned. We'll dive into the exact strategy that's helping traders multiply their gains with Leaps options, but first, let's talk about what Leaps are and where are the biggest mistakes you need to avoid. Leaps, which stands for Long-Term Equity Anticipation Securities, long word, that's why we call it Leaps, are options contracts that give you the right to buy or sell a stock at a specific price, but with an expiration date that's more than a year away. They work just like regular options, but give you more time, typically 1 to 2 years before they expire. For beginner traders, Leaps are a great way to use less money up front to potentially make bigger profits later. Since you have more time for the stock to move in your direction that you want, Leaps are considered less risky than short-term options. You're essentially using leverage to control a larger position in the stock market without having to buy the stock outright. Buying shares outright is like buying a house. You own it completely, but it requires a big chunk of money up front. You're responsible for the whole investment, and any growth in value it has is tied directly to how the market moves. On the other hand, using Leaps is more like renting a house with an option to buy later. You don't need as much money to get in, but you still control the property. If the value goes up, you have the chance to buy it for a profit, but if things don't go as planned, you can walk away without losing nearly as much as you would if you had bought the house outright. With Leaps, you're controlling a larger piece of the market, the house, without having to spend as much upfront, and you get more time to see if the market moves in your favor, just like how renting lets you test the waters before committing to buy. Short-term options are like holding a handful of sand. No matter how tight you try to grip it, the sand keeps slipping from your fingers bit by bit. That's what high theta decay does to short-term options. They lose a little bit of value each day, just like the sand slipping away, until there's almost nothing left. If the stock doesn't move quickly enough in your favor, the value of your options can disappear before you even have a chance to benefit from it. Short-term options have higher theta decay, meaning they lose value more rapidly, which is why most traders lose money with short-term options. Leaps have lower theta decay, making them safer options for the long-term traders. For example, let's look at the Apple $230 strike calls. The ones that expire on September 20th, 2024, decay at 13 cents daily out of a contract value of 96 cents. That's huge. For the same 230 strike calls that expire a year later on September 19th, 2025, the value decays only 4 cents daily out of $22.13. That's not much at all. You see how small of a chunk that is out of the total, right? Compared to how big it was for the short term. That lack of decay makes a huge difference and gives your trade more time to play out. All right, now let's get to the most important part, how to pick the right Leaps option. Because let's be real, not all Leaps are created equal, and choosing the wrong one is like buying a ticket to a concert that's already over. Think of picking the right Leaps option like planting a tree. If you choose the right soil and give it time, it grows strong and healthy, giving you fruit for years to come. But if you plant in bad soil, well, you'll be lucky if it even survives. Leaps options are no different. If you pick a fundamentally strong stock and the right strike price, your investment will have a much better chance of growing into something valuable. First, you want to pick stocks that are built to last. Just like the right soil for your tree. These are companies with solid track records that Wall Street loves. Think Apple, Microsoft, Costco. These aren't just popular stocks. They're companies that big institutions pour millions into because they're dependable. When you buy a Leaps options on a stock like this, you're betting on a company that's likely to keep growing. Next, let's talk about strike prices. You want to focus on in-the-money options, which are like giving your tree a head start in rich soil, as in-the-money options mean the stock price is already higher than the strike price. So your Leaps has intrinsic value. That intrinsic value protects your option from losing too much value over time, just like how good soil keeps your tree from withering, okay? Out of the money options, on the other hand, might look cheap, but they're also risky because they have no intrinsic value. It's like planting a tree in dry sand. It's not going to survive theta decay, which is the options value loss over time. There are times though when out-of-the-money options make sense, okay? While they can be riskier because they don't have intrinsic value, they can also offer a lot more potential reward if the stock market moves in your direction. Think of out-of-the-money leaps like buying a seed for that tree, okay? That hasn't even sprouted yet. It's cheaper up front, but if it takes root and grows, your gains could be much bigger. For example, if you believe a stock is going to have significant growth over the next year or two, an out-of-the-money leaps option can give you leverage to benefit from that move at a much lower initial cost. It's riskier, but if you're confident in the stock's long-term potential, it can pay off big. And that's what I did with the leaps trade on Tesla, which I'll explain in detail in just a little bit. Remember, a leaps option is like planting that tree, right? And giving it time to grow. The longer your option has, the more likely the stock will move in your favor, and the less you'll be hurt by time decay. Short-term options, on the other hand, are like trying to rush nature. Things need time to grow properly. Now let's take a look at the Tesla trade from the start of this video and run the numbers of how much money I would have needed to invest if I wanted similar control of the shares. I alerted my Patreon members when I got into this trade on March 14th when Tesla was trading at around $162.50. My analysis showed that it was very oversold at that point and could potentially bounce, and it had dropped a lot, okay? With Tesla being Tesla, and the stock could potentially tank if Elon even sneezed in a suspicious way, I wanted to play it safe, so I bought leaps options instead of the actual shares. I selected the June 18th, 2026 strike price, which was well over 2 years from the time I got into this trade. The contract price when I got in, as you can see, was $12.51. So each contract controls 100 shares. My cost was $1,251 per contract. I bought 4 contracts, so my cost was $5,004. If I bought 400 shares, which these contracts gave me the control over, my cost would have been $162.50 times 400, which would have been $65,000. Yeah, no thank you. I alerted my Patreon members again when I got out on July 8th, when Tesla was trading at around $258, when I saw a huge bearish order block, as you can see, at the $260 level. I was happy to take my profit and get out with over $15,000 in profit on a $5,000 trade. Here's where it gets interesting. If I bought $5,000 worth of shares at $162.50 when I got in the trade, that would have been 30 shares. And if I got out at $258, as I did, I would have made a profit of $2,865. Still a great 58.8% return, no doubt. But using that same $5,000 and making a 305% return, right, with the leaps, that is the power of leaps. And any day, I'll take 15 grand of profit over 2,800 anytime. You know what I mean? And now that you've learned how to make big money with leaps, there's one more trick that you need to know to truly maximize your gains. Click on this next video to learn the secret and supercharge your returns.